So the first question, as usual, is a case study question. Charitable Trust. I'll read the question, and also, as usual, we will try to underline the important areas so that the question that comes up will be easier. So what we will do? We will do a slightly different approach here. Let's look at the questions first. They're asking which of the following 5 questions. So we'll read the question first and then go back, okay, so that we know what to catch in this particular paragraph. Which of the following activity conducted by the trust is exempt? Okay, so they have given so many activities. The advancement of yoga, advancement of education, both A and B, neither of the activity. Determine the value of taxable supply in respect of donation received by the trust. So there is some donation received by the trust. That amount is what they are asking: 25,000, 75,000, 1 lakh, nil. Compute the amount of input tax credit that can be claimed by the trust. 1,75,000, 2,42,000, 4,20,000. How much ITC can be taken by the trust? So there is some purchases also that they have given. Which of the following statement is correct in respect of GST law in respect of Gurudwara managed by the charitable trust? Renting of community hall is taxable, renting of shop is exempt. Community hall is exempt, or shop is taxable. Okay, both are exempt, both are taxable. Okay, let's see. So there is some limit that we already know that is there in exemption. There are 4 questions. Then, which of the following independent cases will be deemed to be supply even if made without consideration? That question part of it? No, it is not. Okay, so that's completely an offbeat question. So let's see. First of all, question only is based on this. Let's read the paragraph, and this time when we are reading, we are trying to think about the answer that has to come. Charitable Trust is registered under section 12AA. Now that the section has changed, it will be in the examination question, it will be 12AB. Okay. Because in income tax, now the registration for charitable trust is taken by 12AB. So in your examination, you might see 12AB also. Don't get surprised. It's the same 12AA now replaced with 12AB. The trust conducted a 3-day residential yoga camp among people on the occasion of International Yoga Day for advancement of yoga and charged 7,500 per person inclusive of stay and food. Residential yoga camp. What is the exemption that we have for residential yoga camp in exemption chapter? So see, first of all, in charitable trust in exemption, we said only specified activities are exempted. In that, the specified activity includes advancement of religion, spirituality, and yoga. So yoga is included. But in case of residential yoga program, there is another provision which says that the primary activity has to be yoga. Then only I'll give exemption. So here they said it's a residential yoga camp. The primary activity is yoga here. So will I get exemption for that? Yes, it is exempt. Second, the trust also conducted program for advancement of education of persons aged above 65 years in metro cities. A nominal fee was charged for the same. Very important. Advancement of education of people above 65 years. Is that a specified charitable activity? It can be a specified charitable activity provided it is done in what area? Rural area. Okay, there's a specific clarificatory circular says that that has to be done in a rural area. So here it is not rural area, hence it will become taxable. Okay, then the trust received following donations. So they got donation in the month of September. First one, Solid Steels Private Limited donated RO water plant to the trust costing 75,000 and displayed its company name in the RO system installed in the premises of the trust donated by Solid Steels Private Limited, trusted by all. Is it sponsorship or donation? It is sponsorship only, so this will become taxable because it's a company. So are they seeking advertisement value? Yes, they are seeking advertisement value. They are given their Solid Steel Private Limited, trusted by all and all that. Yeah. They are giving their company name into that. Then Mr. Prasanna, a lawyer, donated chair to the trust costing 25,000, and he is written love all. He's that Boche in Kerala. So he gives love all. That's all you write on the chair. No, uh, so there is nothing required apart from that. So whether this 25,000 is taxable, no, there is no advertisement that he gets. This will come as a donation. So what is taxable? How much amount will become taxable? Only 75,000 is taxable. Okay, 25,000 is not taxable. Following are the details of GST payment made by the firm. Okay, so they have paid some GST for some purchases. Let's see. GST of 1,75,000 was paid for purchase of motor vehicle for transportation of needy persons. Okay, they have purchased a motor vehicle wherein seating capacity including driver is 13. Can they take credit of 1,75,000? No, because it is a blocked credit. What is that blocked credit? Section 17.5a. Very good. Section 17.5a says that motor vehicle meant for transportation of passengers having approved seating capacity less than or equal to 13, including driver, is a blocked credit. This is a provision that we have in section 17.5a. So as per that particular section, this is a motor vehicle. This is for transportation of passengers, and it is having seating capacity of 13 including drivers, so hence it comes under the blocked credit category. Whatever GST paid on purchase of this motor vehicle is not allowed as ITC, it's a blocked credit. Then GST of 2,45,000 was paid for works contract services availed from super builders for construction of trust office building. Works contract service for construction of immobile property, is it available as credit? No, that's also a blocked credit. Very good. Section 17.5c. Okay, so this is section 17.5a. The blocked credit, but then it's an MCQ question. There's no point in showing off our sections, right? So that is also a blocked credit. If you construct a building, there is no ITC that is available for the works contract that you have taken. Which is the works contract that I can take credit of? If I am a contractor, I can take credit of inward supply of works contract. Second, if I have taken the works contract to construct a plant and machinery, I can take the credit. These are the two cases I can take credit. Then Charitable Trust also owns. So both of them are blocked to credit. No ITC at all. It was a question which is asking you to say how much is the credit that you can get. Charitable Trust also owns and manages a Gurudwara, which is a religious place, okay, meant for general public. It rented a community hall located in the precinct of Gurudwara for a rent of 8,500 per day. A community hall, Kalyana Mandapam, or an open area, if it is rented on a per day charges, what is the exemption that is available? If it is less than, not even 10,000, less than 10,000 per day, so up to 9,999, it will be exempted. So this is 8,500. So will it be exempted? Yes, it is exempt. Okay, next. It also rented a commercial shop located in the precincts of Gurudwara for a rent of 10,000, exactly 10,000 per shop. If it is a shop, it is exempted if it is less than 10,000. Now it is 10,000 per month, exact 10,000 is taxable. Okay, exact 10,000 is taxable. So you can assume that the trust is registered under GST and all transactions are intrastate. Conditions for ITC is fulfilled subject to the above mentioned information. So now let's go back to the questions and then try to get an answer for this. Which of the following activities conducted by the trust is exempt from GST? Advancement of yoga, advancement of education. A is the correct answer, because education is in metro, not exempted. Determine the value of taxable supply in respect of donation received by the trust. How much? Which is taxable, 75,000 or 25,000? 75,000 is taxable. So it will be 75,000. Compute the amount of input tax credit that can be claimed by the trust. Nothing. So nil is the correct answer. Which of the following statement are correct under GST law in respect of Gurudwara managed by Charitable Trust? Renting of community hall is taxable. No, no, it is not taxable. It is exempt. Renting of commercial shop is taxable. Yes. So B is the correct answer. You guys following? Then question number 5. Determine which of the following independent cases will be deemed as supply even if made without consideration in terms of Schedule 1 of CGST Act 2007. 17. So deemed supply, which are the cases of deemed supply? First, AB and Associates transfers stock of goods from Mumbai branch to Kolkata depot for sale of such goods at the depot. Is it a distinct is it a Schedule 1 activity? Yes, this is para 2. What person? Distinct person. Okay, so these are two separate states of a single person. There is two registration and stock transferred. It's a para 2 Schedule 1 activity. Correct. Raghuveer, a dealer of air conditioner, permanently transfers the motor vehicle free of cost. The ITC of said motor vehicle is blocked. Is it a Schedule 1 activity? No. When it will become a Schedule 1 activity, permanent transfer of permanent transfer will be permanent transfer of business asset where input tax credit has been already claimed. Here they have permanently transferred motor vehicle. They did not even take ITC. Okay, so it is not a Schedule 1 activity. Mrs. Rithi, an employee of Sun Limited, received gift from her employer on the occasion of Diwali worth 21,000. Gift by employer to the employee up to a specific amount per financial year is exempted. What was that amount? 50,000. So here the gift given is 21,000, even though employer and employee are related person, and if the gift is above 50,000, it becomes a supply under para 2 schedule 1. Since it's 21,000, it's not a supply. So what's the correct answer? Which one is the correct answer? First one was the correct answer. So A is the correct answer. All right. Question number 6. So you see, now we are going back now. So we are at November 21 RTP. So the amendments, you can actually expect the old amendments. So if you're somebody who's attended very latest classes, this would actually be a part of the syllabus itself. Okay, would not be an amendment for you. PSY Limited is engaged in manufacturing of motor car. Manufacturer of motor car. It's relevant in this question. The company paid following amount of GST to its supplier against the invoices raised to it. Compute the amount of ineligible input tax credits. Again, so look at the question. They're not asking you to compute eligible, ineligible. So the first reaction of anybody reading this question would be like, okay, what is the eligible one? I have to total the eligible one. But then question is talking about ineligible, ITC. First, general insurance taken on car manufactured. See, first of all, a car will be a block to credit generally, unless it's a car cannot have more than 10. Okay, but we also have section 17(5)(a), which talks about motor vehicle, passenger vehicle. B talks about vessel and aircraft. There is something called as 17(5)(ab). Sorry, 17(5)(a), AA and AB. So section 17(5)(a), AA and AB. So in case of AB, it says that wherever you could not take ITC on an inward supply of motor vehicle, vessel and aircraft, I'm going to block 3 more things for that. I'll not give you credit of 3 more payment that you have made. One is general insurance. Second one, repair and maintenance, servicing. Whatever GST paid on that also will be blocked for you. But there are exception to it. What is that exception? Says that if you are somebody who can, if you are taken this general insurance, repair and maintenance, servicing on an motor vehicle, vessel or aircraft, wherein you can take ITC, you can also take ITC on these services also, which means Repair of a truck, whatever GST you have paid, you can take ITC. Repair of a or insurance of a truck, you can take ITC, because truck is not a blocked credit. The whatever GST paid on truck, because truck is a motor vehicle meant for transportation of goods, you can take ITC. Likewise, then second one which says that for a manufacturer of the motor vehicle, you can take credit on the above thing. So general insurance taken by a manufacturer of a car will be allowed as a credit. So there is a third one also, which says that an insurance company can actually take credit. So here, this 1 crore GST paid on general insurance taken on the cars manufactured by me, am I eligible to take credit? Yes, I can take credit. Second one, buses purchased for transportation of employees wherein seating capacity is 23, more than 13. So can I take credit? Yes, this is also eligible. So I'm giving you CA ticks. Okay. Third one, life and health insurance of employees under statutory obligation, section 17(5)(b), which says, there are a lot of blocked credit, but then there is an exception wherein it is a statutory obligation. The employer will be allowed to take credit on GST paid on life and health insurance premium paid for their employees. So this is also eligible. Outdoor catering services in Diwali Mela organized for the employees. Is it allowed as credit? Outdoor catering is a blocked credit unless it's a statutory obligation. So this is not eligible. So how much is the ineligible credit here? Total ineligible, only 3.5 lakhs. So this is the answer. Now you add this up, 1 crore 31. That's also part of an option. So there's a high chance that you would jump and then take 131. Okay, so please be careful. Read the question. MCQs, that's the only thing ICA wants you to do. Make a mistake. Okay. So seventh question. Which of the following statement is or are correct? Or incorrect? Again, this is for you guys. Incorrect under GST. Not even correct. Incorrect. If the supplier has erroneously declared a value which is more than the actual value of goods or services provided, then he can issue credit note for the same. Is it correct statement? He has declared value above the actual value, so I want to reduce the value. Is it correct? Yes. I'll issue a credit note. If the supplier declared some special discount which is offered after the supply, he cannot issue credit note under GST law for the discount offer. Means there is a discount, but that discount did not exist at the time of supply. And if they've offered this particular discount after the supply, can they reduce it from the value? They cannot reduce it from the value. So they cannot issue a credit note under GST. That is also correct statement. If quantity received by the recipient is more than what has been declared in the tax invoice, the supplier can issue a debit note for the same. So the quantity received by the recipient is more than what is declared in the invoice. They want to increase the value. What is that they'll issue? See, I ordered for 10 items, I got 12 items. So for the 2 items that is difference, what is that they'll issue? They'll issue a debit note. So that's also correct state. There is no time limit for declaring the details of debit note in the return. Is there a time limit for declaring details of debit note in the return? Yes. Same as your ITC timeline, 30th of September, or date of filing annual return, whichever is earlier. So for credit note also, it's the same time limit that you have. For debit note also, it's the same time limit. So if I'm receiving a debit note, a debit note, I have to actually declare that debit note. Debit note will actually give me input tax credit. It's the same time limit for the input tax credit that I have for debit note also to be declared in the return. Beyond which I cannot take any ITC on the debit note that I've received. So you have to declare the debit note in the invoices, in the returns before 30th of September next financial year. Sorry, before not 30th of September, it is 20th of October, which means the date of due date of return under section 39 for the September next financial year. So debit note and invoices both needs to be declared in your return. The last return that you can declare will be the September return next financial year. If beyond that, after that you cannot declare and then take ITC. There's a time limit for taking ITC from the. So I'll give you a little more clarity on that since you're asking that question. Say a supplier, he can issue a credit note and he can issue a debit note. When supplier issues a credit note, what happens to his value for tax? It gets reduced. So there is a time limit for credit note for the supplier itself. Okay, what is the time limit? They're saying that you have to declare your credit note or you have to issue the credit note before 20th October or annual return, whichever is earlier. For a debit note, it is for the recipient. They're saying, see, you're going to increase the value here for the supplier. And the recipient will have to take whenever the value gets increased. So government is happy always. When somebody is using debit note, government is going to get more taxes. So government is going to get more taxes or value or something is increasing. Now the recipient has to take credit of this, right? For this recipient, there will be a time limit, exactly same as ITC time limit. What is that? September return next financial year or annual return, whichever is earlier. Why credit note? It is the supplier who has the time limit, because credit note is going to reduce the value for the supplier and debit note is going to give credits to the recipient because I'm going to increase the value. So time limit is actually there for both of them. Okay, so one time limit is given to the supplier, other one is given to the recipient. So if I'm a recipient, I'll ask him give all the debit notes for 30th of next financial year. Otherwise, I will not be able to declare this in the invoices. So ensure that you give it. So that statement would be incorrect. There is no time limit to declare details of debit note in the return. So that would be the incorrect statement. My incorrect statement should be C, fourth statement. All other things are correct. Question number 8. Miss Pearl is a classical singer. She wants to organize classical singing function. So she booked an auditorium on 10th August for total amount of 20,000. She paid 5,000 as advance on that day. Classical singing function was organized on 10th October. The auditorium owner issued invoice to Pearl on 25th November, amounting to 20,000. Pearl made balance payment of 15,000 on 30th of November. Determine the time of supply in this case. Are they talking about services or goods? Services. What service? Renting of auditorium. Okay, renting of auditorium is a service. In case of service, when advance is received, what is the time of supply for that particular advance? Date of receipt of advance. So 5,000, what will be the time of supply? 10th of August. So 10th August for 5,000. Where it is 10th August for 5,000. So I know that this could only be the answer, but then let's check for the other one also. When was the function that is done? 10th October. So within how many days invoice should have been issued? Within 30 days. So 10th October, October has 11 more days. So November 19th would be the 30th day. When did they issue the invoice? On 25th of November. So what and what I should compare? Can I compare the invoice date? No, I should compare the date of completion or date of provision of service, which is 10th October compared with date of payment. 15,000, when was it paid? 10th, 30th of November. So 30th of November, 10th October, which is the earlier one? 10th October. Okay, so this is the correct answer. 10th October for 15,000, 10th August for 5,000. Which section talks about it? Anyway, not relevant. It's an MCQ question. ABC Limited generates e-way bill on 12th February at 2 o'clock. It used over-dimensional cargo for a distance of 100 kilometers. What is the validity of an invoice? Have a doubt? You can ask chat box or anywhere. I think I have switched off unmuting option for everyone. You can ask on the chat box. Okay, so for over-dimensional cargo, normal cases, for every 200 kilometers, you will get 1 day. That's an amendment. Okay, 200 kilometers. Earlier it was 100. Now 200 kilometers will get 1 day. And for over-dimensional cargo, for every 20 kilometer, you will get 1 day. So you will get how much time here? You should get 5 days, right? Now, when this 5 days starts? From 12th February midnight. Okay, so 12 to 13. From there, you should add 5 days. 12 to 13 midnight. So plus 5 days will become 17 to 18 midnight. So what will be the correct answer? B would be the correct answer. Okay, so your deadline starts from midnight. Clear? All right, next question. Question number 10. Determine in which of the following independent cases e-invoicing is applicable. Okay, now, again, e-invoicing was already tested in the examination. Okay, so it was just a theory question they have asked. They have not asked a bigger question. This kind of question can still come. Then the chances of they asking e-invoicing is lesser. They will rather ask a question on QRMP scheme if they want to ask from a previous amendment. So let's look at the question number 1. Harnam and Company, dealing in interior decoration products, made supplies to various registered and unregistered persons in the preceding financial year. The aggregate turnover of Harnam and Company in the preceding financial year is 60 crores. So who will have to go for e-invoicing provision? What is the e-invoicing provision applicability? Person required to issue e-invoicing. E-invoicing is nothing but your invoicing, your accounting software has to prepare an invoice in the format that is already given INV1. Invoice 1, GST invoice 1 format they have to prepare. They have to upload this information to invoice registration portal. After that, you will be getting a QR code and you will get invoice registration number. This has to be part of your invoices. When you are giving this invoice to the customer, it has to be part of your invoice, and this is applicable only for B2B cases. And the major advantage of doing this is that this will go and sit in GSTR1. So automatically the invoice reconciliation for the customer is done. So he can easily take the credit. So this is to avoid a lot of fake invoicing that was happening at that particular point in time. They introduced this. But the important eligibility criteria that you have to remember is e-invoicing provision is applicable if your aggregate turnover exceeds 50 crores in any preceding financial year from 2017-18 onwards, not last financial year. So if somebody had a turnover of 60 crores in 2017-18 and from there onwards they have only 10 crore turnover, their business went bad, still they'll have to comply with e-invoicing provision because one of the financial year their turnover exceeded 50 crores. This kind of small provision is very important for you. But there are certain type of supply which it does not require, like B2C supplies. Okay. Then there are certain people where we used to use a code word called as PC Gibbs. Okay, that is Herschel Gibbs, then a South African player. So PC Gibbs, these entities do not have to comply with this particular provision. They don't have to comply with this provision. So who does not require, even if their aggregate turnover in any of the financial year from 17-18, even if it exceeds 50 crores, they don't have to do invoicing. No uploading is required. So passenger transportation supplier P. C for cinematographic exhibition supplier, cinema theaters. G, you have Gibbs. G for GTA, government and local authority. I for insurer. B for banking company, financial institution including NBFC. S for special economic zones. These are the people who do not have to go for that. Now let's go back to the question, then try to understand this. So first case, it is Harnam Limited, Harnam and Company dealing in interior decoration products made supplies to various registered and unregistered person in the preceding financial year. Aggregate turnover in the preceding financial year is 60 crores. Are they liable for invoicing? Yes, because their turnover exceeds 50 crores, they don't come under exemption. They are also making supply to a registered person. B2B is there, so they have to go for invoice. Second one, rich and poor bank registered under GST has an aggregate turnover of 75 crores in the preceding financial year. Whether e-invoicing is applicable for them? No. Because what was our exemption? C Gibbs. This B stands for banking. So banking fellows need not go for this. So e-invoicing is not applicable for them. Then 11th one. Mr. Nikunj, a supplier of goods, pays GST under regular scheme. He is not eligible for any threshold exemption. He has made the following outward supplies in the month of August. Intrastate, interstate, outward supplies they have made. He has also furnished the following information in respect of purchases made by him from registered dealers during August. Intrastate purchases, interstate purchases. They have opening credits also available. You're supposed to compute your minimum GST payable. This is an old examination question. There is nothing that is super important in this. We can directly look at answer. It covers that particular type of question called as net to GST payable. So how do you write answer for this kind of question? We will write answer in three different parts. I think I have this being discussed in one of those classes, so I can show you that the sheet. Okay, so your computation should have three parts. So the columns would look like this: particulars, value, then GST columns. So it is net to GST computation question. You have intrastate supply and interstate supply. 6 lakh, 2 lakh is the value, and then you write GST accordingly. Take a total, you will get outward tax liability total. In this particular case, 54,000, 54,000, 36,000. Then you have to compute ITC eligible. There is opening ITC and there is purchases that is available. You get a total of that also. Now, third part is where you will do the set off. The important point you have to remember in doing the set off under section 49 is that first set off that you have to do is IGST, and IGST has to be set off against IGST. Then balance is there, it can be set off against CGST or SGST in any order. Ensure that the minimum GST that you should get as the net GST payable by cash. So you can do the set off after IGST, balance can be set off in any order. Means if you want, you can give full CGST, full SGST, or half, whatever is your wish. This question, there is no extra credit available, but you can do that method, but your net credit has to be, or net payable has to be minimum. So if your net total GST net payable, if it tallies, all answers are correct answers. So IGST, CGST, SGST in any order, then CGST against CGST, then CGST against IGST, then SGST, IGST. This is the order in which you will do the set off. Then you'll get net to GST. So in the third part, which is computation of net to GST payable, that's where you do the reduction. Then you will separately write what is payable by cash and what is ITC carry forward. Please remember, if that question has an inward supply for which you have to pay tax under reverse charge, please remember to add it after net GST computation. ICAI type of answers, what they have done is that they generally add reverse charge also under outward tax liability, but don't do that, because then you will tend to reduce it by ITC. You cannot reduce it. So Wherever you have reverse charge, you can always add it to ITC, then add back after computing net GST. This is something that you have to remember. So this is the model in which you can solve a net GST computation question, which I'm pretty sure you will go ahead and then look at the answers. It's a very simple, straightforward question, nothing to be looking into additionally. Then next question, or probably this is the last question in this RTP. Two more questions. Okay. So there is next question is on computation of taxable value. I can show the answers for this question. Net to GST computation question, the same that you would have had. So you're computing outward tax liability here, then you're computing ITC, then you're doing the set off. But then we are, the only thing is that we are doing it in one single table. They're doing it in three different tables. Not required. Follow our method. The next type of question that you can see in this RTP is computation of taxable value question, which is very straightforward and simple. Okay, let's look at this and then try to find answers, and then we'll look at how this is being solved. Namo Shankar is a registered supplier in Mumbai and has supplied goods to Narad Traders and Nanti Motors located in Gujarat and Maharashtra. Namo Shankar has furnished the following details for the current month. Price of the goods excluding GST is 10,000 and 30,000. Packing charges and commission. Should I add packing charges and commission into the value? So this is section 15 question. Yes, it needs to be added. Both of them are incidental expenses. 15(2)(c) is the correct section reference. Then weighman charges, should I add? Yes, 15(2)(c) itself has to be added. Then discount. Can I reduce discount from the value? Yes, if the discount is given at the time of supply, it has to be recorded in the invoice. It is recorded in the invoice here. It can be reduced from the value. And you have to compute what is the GST liability on the net value. You compute GST liability. So when you go ahead and then look at the answers would look like this. For Nandi Traders and Narad Traders and Nanti Motors, we have price of the goods, packing charges are added, commission is added, weighman charge is added, discount is reduced. Ideally, you should actually give it in bracket so that you don't forget to reduce it. You have net taxable supply and you compute GST there itself. There is nothing tricky in this question. It's a very straightforward question which can only be used to um, look at the format, nothing else, not even value adding. So there's a question from Anaga. If late fee is paid by the recipient in some lump sum amount, should it be always taken as inclusive of GST? Yes. Late fee and interest, it is generally treated as inclusive. There are two cases where we will not treat it as inclusive. Case number one, they have specifically said it is not inclusive. Okay. Case number two, there is no GST rate available. So how do I do the 100 divided by 100 plus GST? How do I do? I don't have GST rate. In both of the cases, I can take the exact value. In all other cases, I will always take it as inclusive. The last question from this RTP discussion. Examine whether the liability to register compulsorily under Section 24 of CGST Act arises in each of the independent cases mentioned below. First one, Hira, a supplier in Haryana, is exclusively engaged in supply of potatoes produced out of cultivation of his own land within Haryana and also outside Haryana. Are they liable for registration? Which section is this? If there is an individual farmer or an HUF which is doing farming either by using their own labor or direct labor employed by them, then they are not liable for registration even if their turnover exceeds the limit, even if they are making interstate supply. So they're not liable for registration. This is section 23, exemption from person not liable for registration. Good. Then INIA of Telangana is exclusively engaged in intrastate supply of toys. Its aggregate turnover in the current financial year is 22 lakhs. Telangana comes under which category of states? So we had a code word to learn, three categories for registration. We call it general category, medium category, which had a code word called as Saptam, then small category, which had a code word called as TNM2. So what is Saptam expands for? Sikkim, Arunachal Pradesh, Pondicherry, Telangana, Uttarakhand, Meghalaya. TNM2 expands for Tripura, Nagaland, Manipur, Mizoram. In Saptam, all the people will have limit of 20 lakhs aggregate turnover, supplier of goods or services. For TNM2, the limit is 10 lakhs. This is the understanding. For general category, if they are doing service or goods and service, or they are doing supply of goods but it is PTI, then their limit is 20 lakhs. Otherwise, their limit is 40 lakhs. This is the structure. Now they are in Telangana, so the limit I should consider is 20 lakhs. Their turnover is 22 lakhs. They are liable for registration under section 22. This is the understanding that you need to have. So that concludes our discussion on November 21 RTP.